Welcome to the deep dive video. This is based on daily charts, and this video is made up of those charts that I may not have covered over the last week or that I didn't show in more than one video. And sometimes it's helpful to go back and look at these because we can get some insight, and even more importantly, we can just see the status of different charts that we often use. This is being prepared for Monday, January 30th. The first graphic to look at is Friday's close, where we look at the value on the left and growth on the right, and then the core, that's the ETF that goes with this particular part of the market. In Friday's session, growth did outpace value for the large caps, but it underperformed for the mid caps, and it was even down for the small caps. As the market's been going up lately, we're seeing some strength in different areas, but we're not seeing real leadership in the mid caps and the small caps, which is what we generally see in a good, healthy environment. Our mid caps are looking the best as far as our technical analysis score, and I'll show you that here in just a moment. Another chart that we look at is the VIX. In addition to the charts that we look at every day, I also plot a chart with the RSI going back 9 periods so we can try to determine extreme positive or extreme negative readings. Right now, we're not giving any kind of an extreme reading, and as the VIX has been going down, the RSI has also been going down. Another thing we look at is the retracement going back to the all-time high. We're now down 15.52% as the market has been rebounding as of late. Looking at some support and resistance areas, we're far away from either a red or green cloud now with our Ichimoku cloud. We did establish some support right at the end of the year, and we've been bouncing up off of that, but we're kind of in no man's land currently. Technical alerts, just going back through Friday's session. If I tried to have all the technical alerts for the whole week, it would be bigger than this whole screen. These are alerts that are generated automatically by StockCharts.com, and they tend to start at the bottom and then work their way up. You can look at the time stamp over here on the right. On Friday, we did have the Dow going back above 34,000. The financial sector had a BPI cross above 80, so it's starting to get extreme positive, but it's still positive. The Nasdaq went above 11.6, and then oil crossed down below 80. Here are the other charts showing our rank as far as what's looking best technically now based on some predefined parameters. The mid caps are looking the best, and they're coming in at 73.1, so they're in first place. Second place are small caps at 57.3. Third place are the diamonds at 51.3. Fourth place is the S&P 500 at 42.8. And then in last place, although much improved, are the QQQs coming in at 34.6. This had dropped down below 10. And if you look over here, you can see how it's been showing a lot of improvement lately. Some short-term charts that I don't really cover all that much. I like to use these rainbow charts quite a bit. But when we're in really choppy markets like we have been in 2022, it's not real helpful to look at these all the time. As we come back up and hit the upper side of the rainbow and go above that, some of our moving averages are starting to roll over and turning more positive. When this is most helpful is when we're in a solid uptrend or downtrend and the moving averages are above or below. This is a short-term rainbow chart going from 10 to 50 periods in the moving average. The force index, when it's above 0, that's positive. It's also been climbing lately. That's also positive. And I plot some Keltner bands here. They're similar to Bollinger Bands. When we hit the upper band and go above that, that's extreme positive. When we drop down below the Keltner band, that's extreme negative. We're not giving any kind of an extreme reading right now. So overall, the force index is positive. Some intermediate term charts include the open, high, low, close, and then I plot a 20-period simple moving average of those. When we're going up and we see a retracement, sometimes one of these levels may act as support. When we're going down and we see a bounce, some of these levels may act as resistance. As we've been going up, the moving averages themselves are going up. Another thing is standard deviation. How far are we getting away from the standard or average price of a particular stock or index? This measures the S&P 500. Starting to come back up now, but we're still below this moving average. This just means that the standard deviation is fairly low. The parabolic SAR system, when the dots are underneath, that's positive. When they're on top, that's negative. Right now, we continue to be in an overall uptrend. The mass index is not generating a signal currently. We really get most excited when this is generating some kind of a signal, when it goes above the dashed line that's red, then it goes above the blue line, and when it comes back down and crosses the dashed red line again, that is an official signal. Whatever the market's doing at that point, we're looking at a reversal of the trend. Way over here on the right-hand side, we're currently not generating a signal. The boom indicator just measures how far do we get away from either the 50-period moving average or the 200-period moving average. We're not giving any kind of an extreme reading, either positive or negative. This chart is positive, though, because we're above zero and advancing, both on the 50 and on the 200-period moving average. Another chart we look at are the highs minus the lows on a daily chart, where we're above the zero line, so that's positive. Where we really use this chart is when we're getting an extreme positive reading or an extreme negative reading. We're not really seeing that now. It is positive, though, because we're above zero. Here's a 20-period triple exponential moving average and a double exponential moving average. The triple is dark blue and the double is green. We can see that both of these moving averages are going up higher. I also plotted an additional moving average. This is going back to the all-time high. It's an anchored moving average, so it's anchored to the all-time high. That was on January 4th. That's the intraday high that we set. As we've been coming back up, sometimes this moving average will act as resistance. We're just at that moving average and slightly above it currently. It would be much more positive if we can break above this moving average. The Connors RSI is a variation of the RSI, where we're looking for an extreme positive or negative reading. When we're above the dashed line, that's positive. When we're below, that's more negative. Well, the Connors RSI right now is above the dashed line, so that's positive and not giving us any kind of an extreme reading. Here's an intermediate term rainbow chart going from 50 periods all the way up to 100. And again, we just look for what is the overall rainbow doing. Is it rolling over? Is it giving us an indication of the trend? A lot of times when we're coming through this rainbow, some of these moving averages in here will act as either support or resistance. Another thing we keep a close eye on is volume. In a good, healthy environment, we will see volume expanding as the market goes higher. We haven't really been seeing that lately. Volume has been picking up, and we're just coming off of recent holidays, so this is helping to improve this indicator. If the market was really continuing to go up, we would want to see the volume oscillator really intensify. And it's not really doing that, but it's not negative at this time. The Vortex indicator measures buyers against sellers. The green line's on top and advancing. The red line's on bottom. Even though it ticked up a little bit, the green line is far away from the red line, so this chart is also positive. For the ease of movement going back one day, this just tries to measure, have we overdone it to the upside or downside? I tend to look more below at the 14-period ease of movement, and this tries to measure the path of least resistance. If we're going up, that means the ease of movement is positive, and vice versa. Even though we declined, we're still above zero, so this is positive overall. Money flow index, an oscillator that we use. We typically use this most when we're getting an extreme positive or negative reading. We're not getting that. It is positive because we're above 50 and advancing. Moving average study. Sometimes I look at this every day and show it in every video that I do. Other times, like right now, it really hasn't come into play. The 20-period exponential moving average, even though it declined, is still advancing overall. The 50-period moving average is pretty much flat and not extreme currently, and the 200-period moving average is advancing. So this chart is still basically positive overall. We really study this when it gets above 80 or below 20 for each of the different moving averages. Advanced decline ratio, both the blue and the red line, they're above zero and advancing, so that's positive. We use this like an oscillator when it goes over 200 to the top and minus 200 on the bottom. Here's all of our oscillators on one chart. The two top oscillators are shorter term, and they're still positive, even though the slope is trying to roll over slightly. It hasn't crossed over negative. Intermediate term, we have the MACD, the PMO, and the PPO. They're still comfortably positive. Longer term, we have the TRIX and the KST, and those continue to advance. The %B indicator, which goes hand in hand with the Bollinger Bands, when we get to the upper side and actually exceed the upper Bollinger Band, we get an extreme positive reading. When we go down and exceed the lower band, that's an extreme negative reading. we're not really getting much of a reading. We had one earlier, but currently we're not extreme positive. The RSI, I plot two different lengths for this. The 14 period, that's more the standard or default settings that folks like to use. When we're above 50 and advancing, that's positive. Then down below, I have a 9 period. It's also above 50 and advancing and just getting ready to go extreme positive. Balance of power. When we're above the dashed line, that's positive. When we're below, that's negative. Right now, we're above that, even though we declined slightly in Friday's session. And this just measures how far is the S&P away from the 200-day simple moving average. We spent a large part of 2022 underneath the 200-day moving average. Recently, we've been able to cross above that. This is TTM squeeze. This is also another oscillator. When we're red and going down, that's negative. When we're coming back up and turning blue, that's more positive. This is positive overall and not necessarily giving us an extreme reading. Looking at our different charts, the Heikin Ashi showing a lot of improvement with open candles. The Kegi chart is black and advancing, that's positive. The Renko chart has open blocks, that's positive. The 3-line break also open candles, so that's positive. And not getting any new signals on the point and figure chart. We're seeing X's in here. We're working off of a low pole reversal signal that was generated on January 9th. Our different trading systems, this is designed to be a standalone out-of-the-box trading system. This is called the go, no-go system. When we're going up and the bars are blue, that's positive. So we're positive right now. And then this system generates either go or no-go. When it's a blue go, that's positive. When it's a purple no-go, that's negative. And we're coming off of a recent buy signal with this system. Another out-of-the-box type trading system is called the CMB Composite. When we cross above one of these lines, here was the red line, that is a buy signal when we're going up. If we're coming down, that is a sell signal. And then this signal is confirmed when it crosses the other line. Well, we're coming off of a recent buy signal. We're not really extreme positive yet, but we're getting close. If we go up above this black line, we'll start to generate an extreme positive warning. Some longer term charts. Here's a long-term rainbow going from 50 periods all the way up to 250 periods. Again, we're looking for the overall movement of the rainbow. It was mostly up in 2020 and 2021. It's been mostly down in 2022. 2023, we're trying to figure out which way does the market want to go. Some of these moving averages will either act as support or resistance. Special K, a very long-term oscillator that measures the trend. We're still in an overall downtrend, but the Special K is turning up and could be getting ready to cross the moving average soon. Some broad market measures that we look at. This is the NASDAQ 100 up on top. Here's the Vixen, which is the VIX for the NASDAQ 100, just showing how volatility has been acting lately. And volatility both in the S&P 500 and in the NASDAQ 100 have really been decreasing. Down below is a line chart. This is just plotting the closing values for the Vixen. I do have a few rate of change charts. I don't show all of them on here because I would just be saying the same thing over and over without it really telling us anything. Keeping an eye on this 250 rate of change. This is very long term. We had come back down to the COVID low and we're bouncing up off of that. So this could be testing that COVID low. And then this is a much longer version of that chart going all the way back to 1980, where we went a lot lower than this during the whole financial crisis. It's also showing how we've come down to the COVID low and we're bouncing up off of that. Our possible positive scenarios, sometimes I show these in every video and sometimes I go a long period of time without that. This is one setup that we look at. It's a 19-day exponential moving average of the advanced decline ratio. On the top is price, and we're coming up, and it is positive. The reason I'm not showing this is the extreme negative reading that we usually use to trigger these possible positive setups. That was quite a while ago. We came back up, bounced around, came back down. Now we're going back up. Because so much time has passed, I'm not really using this as a possible setup. We use the same thing down below with the volume. We had an extreme negative reading. We bounced up, came back down, almost got extreme negative again, but that was not confirmed by price movement, and now we're starting to go back up. When we'll pay more attention to this again is if we continue to go up and we get above this green line on the top on both price and volume. That looks like we could be getting close to exhaustion. Another one are the percent of stocks in the S&P 500 that are above their 200-day simple moving average. After getting an extreme negative reading and bouncing up, well, we came back down, we're bouncing up, coming back down. So I'm not really using this now. I like it when these signals generate something and then we're still working off the same signal all the way up. And that's just not happening currently. Same principle applies to this. This is the S&P 500 with the stocks above their 50-period moving average. This is more intermediate term, where the previous chart was longer term. After we get an extreme negative reading and it bounces up, this can give support to the S&P, but we've seen so much up and down movement that this isn't really a valid signal currently. Same thing with the mid caps and also with the small caps. If these three charts that I just showed you start to go above 90, then you will see these again because it looks like we could be getting to extreme positive readings, but we're not there yet. Another thing we look at is the 10-day average of the S&P 500 highs minus the lows. Same basic principle. When we get extreme negative and start to bounce up off of that, that's the signal that we use only when it's confirmed by price. Well, we were bouncing up off of this, but price was going around all over the place. We came back down but did not hit an extreme negative reading and then have been bouncing back up. We're still positive because we're above 50 and we're not extreme currently. So overall, this chart is positive. Thank you. I hope you found this helpful. I hope you use this in conjunction with the daily briefs that I post, as well as the weekly video update and the intermarket analysis update. Have a great week, and I will talk to you in the next video.